The property market has been red hot. Values are continuing to increase at crazy levels. We helped a first home buyer buy their home for $800,000 in January 2021. 10 months later, their house was worth a whopping $1.1 million according to the bank. That's a $300,000 increase tax-free. But what's this got to do with removing a guarantor from a mortgage? Well, this client bought the house using a guarantor home loan, using their parents as guarantors. In other words, they put in $0.00 as their deposit, and today, 10 months later, they've got $300,000 in equity. Normally that wouldn't be the case. Well, normally guarantor loans are removed within 2 to 5 years, as that's the time it ordinarily would take to build up 20% equity in the property. But with the way property values have been going, if you've used the help of a guarantor to buy a home in the last 12 plus months, you could be in a really good situation. Like our clients who have just helped remove their guarantor from their parents in the space of a few months. But how do you actually remove a guarantor from your home loan? Well, in this video, I'm gonna step you through the step-by-step process of removing your parents or guarantors from your loan. But hey, before we start this video, if you find it helpful in any way, do me a little favor and just leave a little like or a comment below. A little gesture like that can make a massive difference to our channel, and if you haven't already, hit that subscribe button. So removing a guarantor. So you might have gotten a guarantor loan a little while ago, and your parents or family have done a massive favor in helping you out by being your guarantor. So ideally, you want to try and remove them as soon as possible because their property is still on the hook. And if they go to sell it in the short term, or if property values change, you might not be able to remove them again for a long time. So realistically, as soon as it's possible, you want to try and put into place a plan to get rid of your guarantors. So how do you actually remove a guarantor from your loan? Well, it's done in 8 simple steps. The first step, contact your mortgage broker to review your financial situation. If your income or pay structure has changed since you bought your property, your broker needs to check this out and make sure you're still going to be eligible for a loan. If you've changed jobs, maybe industries, when you go to remove your guarantor, the bank is going to do a full assessment of your financial situation. They're going to look at your pay, how long you've been in your job, if your credit file's changed, if your payments have been made on time and are all up to date with your current home loan, and assess to make sure that you can still afford the loan today. If your situation's changed, you might have had a kid, you might be pregnant, who knows? The bank's gonna take that into consideration and you might not be able to refinance your loan at that point. So your mortgage broker will factor this in. Step 2, arrange a bank valuation of your property. I might think my place is worth $10 million, but sometimes the bank doesn't agree. It's often the case that we'll have clients that have spoken to a real estate agent, they've come around, done an appraisal and said, your property's worth $1.5 million, only to find out the bank thought it was worth 900. Unfortunately, when the bank values the property, they're looking in the rear vision mirror. They're looking at sales from 3 to 6 months ago. They're not looking at what the property could sell for today. So if your bank valuation comes out the same as your market valuation, that's amazing. It could be worth way more than what you think. If it comes in low, that's okay. As we covered in other videos, it's worth getting more than one valuation done. At the end of the day, a bank valuation is just someone's opinion, and another valuer might take another take. In fact, I had a valuation that came back this morning from a client that was looking at removing their parents as guarantors. He'd had some real estate agents around and they'd appraised the property between $1.5 to $1.6 million. Pretty sweet, right? We got their bank to go out there and the bank valued it at $980,000. He wasn't stoked about that. So we got a second bank valuation and it came back at $1.2 million. In between the first valuation and what the real estate agent thought. But at the end of the day, that was more than enough for him to move forward and get rid of the guarantor. Point is, it's worth getting more than one bank valuation when you're looking at removing a guarantor. Step 3, confirm the total loan amount. Oftentimes when you get a guarantor loan, your loan might be split as 80% against your place, 20% as the guarantors. You might have taken on car loans, might want to consolidate other debts, etc. So it's worth getting all those numbers together and finding out what the total amount of lending you're going to need to remove your guarantor. In the current market, it's unlikely, but it can also be the case where you might have fixed your rate and there could be fixed break costs. You could potentially add these onto the loan if there's equity, but again, you're gonna have to find out what that figure is to ensure that you're not paying extra lender's mortgage insurance, or there could be other break costs that you just want to find out up front before you go down the path of removing the guarantor loan. Step 4, you want to make sure you meet the lender's criteria. Different lenders have different criteria, ranging from anything from using your bonus income to how long you've been in your job, even your industry. And although one bank might think your property is worth 1.2 million and the next thinks it's worth 980, you might not be eligible for a loan from the one that thinks it's worth the most. So you want your broker to check this out. If you recently become self-employed, for example, some banks will accept 18 months ABN registration. Others will want 24 months or 2 years with you as self-employed. Like I said before, removing a guarantor from your home loan is a completely new loan application if you're changing banks. Which brings me to step number 5. You might be able to do what's called a partial release or internal refinance. Now, if it's possible for you to stay with your current lender, there can be circumstances where you can just remove the guarantor. There's some banks that will let you do it as a variation or an internal refinance. So in other words, they won't actually touch your existing loan. They'll leave that there, and in the background, they'll remove mum and dad's property and leave your house there because it's gone up in value from $800 to $1.2 million today. Now, there are some strict criteria on this. The LVR needs to reduce from what it was, it can't go up. So for example, when you got the guarantor loan, if the LVR was at 80%, so it's 20% equity against both properties, the banks won't need to reassess stuff. But if it's gone up and you're potentially gonna have to pay lender's mortgage insurance, that's where you'll have to go back to what I mentioned before and do a whole new loan application. Your mortgage broker will explain this. It gets a bit technical, but if your situation has changed, you might have moved jobs, you might not be eligible for a home loan these days, this could be a good option to mean you don't have to do a whole new loan application. It's a good option, especially if you might have done one of those cheaper fixed rates for 4 years and you don't want to get rid of that 1.99 or 1.89 fixed rate for the next 4 years and stay with the current lender and just remove mum and dad in the background. Step 6, get your loan approved. This is where your broker will either go through a brand new loan application through a different lender, or they'll do a partial release through your current lender. Like I mentioned before, this whole process, if you're doing a new loan application, can take between 6 to 8 weeks. Because like when you bought the property, the bank has to check all your info, issue loan documents. You got to sign them, you got to get them back to the bank, then you got to complete a release to get rid of mum and dad's property. So it's not necessarily a fast process, but the outcome is totally worth it because it means that your parents will take their property off the table and you'll be standing on your own 2 feet. Step 7 is to complete the discharge request. So if you are moving banks, this is where you have to get mum and dad involved. So if mum and dad help me with a Commonwealth Bank home loan, for example, and they're my guarantors, you all need to sign the discharge request saying, yep, we want the bank to remove the mortgage from mum and dad's property and for me to stick around. Again, your broker's gonna help you out with this because it's a bit of a different process and you just need to get the bank's consent to say, yep, we're totally cool with releasing both properties, releasing one, because now your house is worth way more than what it was 10, 12, 3 years ago. And then the last step is your parents get their own free title. This is where, like I mentioned before, the bank will release your parents' property from the mortgage. Now, if you had the only mortgage on there, the bank will potentially remove it and it'll be an unencumbered property. So it's up to your parents whether or not they want to actually store that, if they get a paper title or electronic. Get your solicitors probably involved at this point because they'll work out the best option for them. If mum and dad had an existing mortgage, not much will change there. Now, it's worth noting that the banks will charge some fees to remove a mortgage. There's some land title office fees. Depending on your state, they range from $200, $300, $400. And they'll charge a discharge of mortgage fee, which with some banks will be around $350. So it can cost a little bit, but like I said before, the rewards can be way higher because it means your property is on its own. And if you're looking at doing any renovations in the future, if you're looking at buying investment property, or like I said before, if your parents are looking at selling and doing their own thing, at least you don't need to get them involved and you've got all the properties crossed together. So now we've covered how you'd remove your guarantor, but you might be wondering, what are some of the reasons behind removing a guarantor? The most common that we see at the moment is where the guarantor or your parents are looking at selling a property. We had one recently where the parents had their home and an investment property and they decided it was time to sell the investment property. Unfortunately, the bank held the parents' investment property as a guarantor property. So we had to end up swapping out with their home, and it's quite a lengthy process, which can be hard. When you've sold a property, you've got to sell it in 30 days. So there's quite a bit of moving around there. So if your parents are even considering selling their property and they've helped you out as guarantors, it's definitely worth chatting to your mortgage broker sooner rather than later to help all that stress when it comes time to sell. Another common reason to remove a guarantor is when your parents or the guarantor might be getting divorced or separated. So as such, they might be changing who owns the properties, and it does completely change how the bank structured your loan. In this case, you may need to get the whole loan reassessed because the guarantor's position is changing. And some banks will factor in the guarantor situation when you went to do a loan application. We covered that in our other guarantor video. There are some banks that won't consider your guarantor or parents if they're retired. So if your parents were working 5 or 6 years ago when they helped you out and now have retired, it could cause an issue. Again, I'd suggest you speaking to your mortgage broker to check out these policy things to make sure it's not going to be a problem or potentially stop your parents from being able to sell or remove the guarantor in the future. So that's it for today, you guys. Have you got a guarantor loan? Have you tried removing your parents from there before? Let us know in the comments below. And if you need any help removing a guarantor or wondering what your property is worth, hit us up at huntergalloway.com.au. We've helped a lot of people remove their guarantors using some of the strategies in this video with really great results. Until next time, see you guys later.